So you're interested in Salida, Colorado and the housing market here? Well, in this video, we're going to be going over the real estate industry and doing a deep dive into mortgage rates and what's going on in the overall housing market. If this is your first time to the channel and you want to know more about living in Salida and surrounding areas, please subscribe and also hit the notifications so you're notified as soon as a new video comes on the market. I'm Monica McCarthy, a realtor that specializes in Salida, Colorado. And I get calls all the time from people just like you who are wanting to live in Salida and surrounding areas. So whether you're wanting to move here in a few weeks or a few months, please reach out to me. My information is below. But let's get started. We are going to talk about the mortgage rates and the current market. We're talking here at the middle of Q2 2024. And let me introduce to you Jess Fisher, who is a mortgage broker also in Salida, Colorado. Let's get started. Okay, the mortgage industry. We have a lot of feelings about that right now. Okay, tell us what, like I said, we're at end of April 2024 as we're filming this. Q2, we also talked, if you watched at the beginning of this year, there were some predictions about things and our mortgage rates aren't really going down, they're going up. What's going on?
Yeah, so, let's back up a little bit.
Yeah.
Originally, towards the end of last year,
Okay.
The thought was that somewhere middle-ish 2024 that rates would be coming down.
Yeah.
And the market leads that idea. So the market anticipates where things are going to be.
Okay.
And so gets out ahead of it. So start of this year, we did see mortgage rates starting to come down.
Yeah.
Probably at the lowest so far this year, I was quoting somewhere around mid to low sixes for rates. And so everything was kind of going on like it was supposed to.
Totally.
However, then we got the inflation data. The Fed got the inflation data, and the Fed basically, instead of saying a high likelihood of lowering rates in June this year, kind of backed that response up a little bit and said, well, we're not quite sure. Rates may have to remain higher for a little bit longer.
Okay.
And essentially that scared the market. We saw the stock market go down.
Yeah.
And then we saw mortgage rates go up.
Gotcha. Okay.
Yeah.
So what are we right now?
Right now we're about mid sevens.
Mid-sevens. Okay.
Yeah. So we're kind of back to where we were a year ago.
Okay.
Ish. Yeah.
Okay. And so how is that affecting our market as a whole in terms of buying and selling and that sort of thing?
Yeah,
what are you seeing?
Great question. As far as affecting the market as a whole on the seller side, I'm seeing less homes come on the market than I had anticipated, mainly because rates are high and a lot of people are, in homes at 3.5%.
Yeah.
So it's a lot less house when you're paying a mortgage at 7.5%. So a lot less homes coming on the market than I anticipated. However, the homes that are coming on the market, I'm seeing sellers kind of past the euphoria of the peak of the market and being able to sell their home for kind of a high amount. I'm starting to see more realistic purchase prices come out as well too.
Yeah, I'm seeing that too. Yeah.
That's a benefit to the buyers. So we have less inventory than possibly anticipated, but we're having more kind of realistic home prices. So it kind of makes the affordability there, kind of checks that box for a little bit more affordability this year.
Exactly. Yeah, so it kind of feels like it's still buyer leaning market, not quite slam dunk buyer market, but buyer leaning in the sense that prices are starting, and this depends on where you are. Chaffee County, plateauing, maybe going down. But overall, it's looking like a little bit down.
Yeah, I would say since the beginning of the year. Now, when we're talking about inventory at the beginning of the year, that's lots of times carryover from the previous year. But I would say home values, just based on appraised values, is coming down.
That's right. You're seeing appraisals coming in lower, right?
Appraisals coming in lower, and I'm seeing the asking price start to reflect more what the appraisals are seeing as well too.
Gotcha.
So we're kind of an evening out of pricing as far as sellers' perception and what appraisers are appraising.
Gotcha.
We're starting to see an evening out with that.
More realistic seller expectations. Yeah. And then, we were talking before, there are houses that have been sitting on the market for months with those sellers that are holding out on that big price point that they could have gotten a year ago, maybe, but not so much now. So those are either sitting or they're being reduced and kind of chasing the market by going down and down. And then homes that are coming on the market right now, some of them are going a little faster because, like you said, the sellers are pricing them more realistically. Mm-hmm. And then what about, I know at the beginning of the year and then even last winter when rates were high as well, we were seeing a lot of sellers offer concessions and kind of just trying to make as favorable as possible an offer for or a deal for a buyer. Are you seeing a lot of seller concessions right now?
I'm not seeing as much seller concessions.
Okay.
I think the seller concessions that were happening, we'll just say on the back half of last year, were people trying to, they needed to get out of their house, but they'd already kind of set in their mind a certain purchase price or maybe a certain profit that they need to be able to go buy another house.
Sure.
And so they were trying to work out ways to be able to still kind of make that work, extend the reality that was slowly, drifting away.
Yeah.
Now I think most sellers are more in reality, and so I'm seeing less seller concessions now. Okay. But again, home prices have come down compared to last year.
Yeah, so the overall bottom line for the buyer is still more favorable for the most part.
I would say so. Okay. If we take the seller concession aspect out of it, rates are roughly about the same as they were last year now, roughly. But we're looking at lower purchase prices. The home market has come down.
Okay.
So you're being able to buy the same house that would have cost you more last year and definitely more the previous year for cheaper this year.
Yeah.
So I'd say overall it's a net benefit for the buyer.
Okay.
A lot of the focus has been on the rates.
Yeah.
And yet the rates obviously do matter.
Yeah.
But when you look at it from a purchase price relative to last year, all rates being equal, it's actually benefiting the buyer right now.
So it's a little bit better to buy now than it was last fall even, right?
Yeah.
And then what about, so like I said, we're in April of 24, towards the beginning of Q2. We have 2 more quarters to go and the rest of this one. No crystal ball.
No crystal ball.
But tell us a little bit about what we can, maybe not expect is not the right word, but we could foresee and what's going on to affect that as well.
I think that the Fed is in a position where they really do need to lower rates.
Okay.
And in large part because if you look at things like credit card delinquencies, you look at people in almost default to their mortgages, the cost of goods in the grocery store.
Yeah.
I mean, in general, most people are really stretched right now.
Yeah.
And so being able to lower the rates to kind of increase demand, because essentially the way the Fed works, a lot of people think that they control inflation, but they don't really.
Okay.
Oil prices make up about 40% of what inflation is.
Wow.
The Fed's job really is squashes demand.
Okay.
That's where they really work. So when the Fed talks about controlling interest or the rates, it's really more them squashing demand because they increase the rates, so there's less demand, and we're all experiencing that in the housing market.
Absolutely, yeah.
So they really want to be able to lower those rates. So that's one thing. But then the other thing is we have the Russia-Ukraine conflict. We have the elections coming up. We have the Iran-Israel stuff going on. There's a lot of unknowns right now. There's a lot of uncertainty.
Volatility in the world, right?
Yeah, there is. And so who knows what's going to happen? Any of one of those things could, cause the market kind of turn one way or the other.
Okay.
But I think when we're just talking about interest rates relative to the Fed and how that affects mortgages, I do foresee the rates coming down if we're just looking at those.
Yeah.
With that being said, when are they going to come down? It could be later this year. It could be the beginning of next year.
Yeah.
In other words, I wouldn't necessarily hold out. If I was a home buyer right now, I wouldn't wait. I think a lot of people last year played a waiting game, thinking that this year would be the year. Then it started out looking like it was going to, but things have changed.
Yeah.
So
if you need to buy a house, buy a house. And then, like we were saying before, if rates go up and you buy now, great. And if rates go down and you buy now, refi later, right?
Yep. You're almost never wrong for purchasing now if you find the house that works for you and your family and it's not overextending you.
Yes.
So you can kind of weather whatever, shifts happen. Then you're not wrong because you'll have the ability to refinance later.
Yeah.
Rates right now, mid-sevens, they could go back to, the 80s where we're looking at 12% to 18%.
I hope that doesn't happen.
We don't want that to happen, and
Sure.
nobody does.
Of course.
And I don't know that it's going to be that extreme.
Yeah.
But it's been done before, so it's possible to happen again.
Okay.
And so if you're in at 7.5 and rates go
Suddenly
to 10,
that looks great, right?
Then you look like the smartest person in the room.
Totally.
Right? And if it goes down to 5.5, well, you get to catch up with the smartest people in the room because then you just refinance.
Exactly.
Yeah.
Yeah. Okay. Well, anything else to add if somebody's looking to buy a home right now or sell a home right now? Because that's a variable too. Any other tips and insights?
I just think having a realistic outlook of the uncertainties that lay ahead.
Okay.
And kind of have that within your budget. I just don't think buying something now and being like, oh, I'm going to be refinancing in 6 months is necessarily realistic. I would say be able to, whatever you purchase, be comfortable with that cost for at least 2 years.
Absolutely.
And then
that's a good rule of thumb. So don't overstretch yourself. Yeah. So if you can't afford that really big house, buy something that's more comparable to your actual budget, right? Yeah. And not wait for the refi.
Yep.
But knowing that it could happen, but not planning for it in a certain amount of time is what you're saying.
Yep.
Okay. Well, good to know. Well, thank you for that insight. We don't know what lies ahead, but hopefully we see some sunnier days. It is going to be summer soon, so that's positive. Right? Yeah. And then, seasonality there's a degree of that in our market, particularly in Chaffee County. We are seeing some more buyer activity with the seasonality of, just absolutely. More people buy homes this time of year. So hopefully we have a bit more inventory coming up. And if you found this video helpful, please subscribe. Thank you so much for watching. I'm Monica McCarthy, a realtor in Salida, Colorado.
And I'm Jess Fisher with Peakview Mortgage.
All right. Thank you so much.